Hello, ladies and gentlemen, Greg Mikulowski from ForexLive.com. This is the Forex Kickstart video where I take a look at three of the major currency pairs: Euro versus US dollar, dollar versus yen, and sterling versus US dollar from a technical perspective. So let's get started. The CPI data that was just released came in about as expected, with 0.2% for the headline, 0.3% for the core, 2.6% for the headline year on year, and 3.3% for the core. All that was as expected. Maybe a little nuances in the rounding, but we are seeing yields move lower with the 10-year now down about 5.5 basis points. The 2-year is down minus 7.7 basis points. The Nasdaq Index is up 44 points. The Dow Industrial Average is up 84 points, and the S&P is up about 13.76 points. Currently, at the moment, the U.S. dollar did move lower with the euro versus U.S. dollar extending up to a level of 1.0649. If I go back in time and take a look at this low right here, that level comes in at 1.0649, and the price moved just a little bit above that level, but backed off. Currently trading at 1.0639 as I speak. On the top side, we're going to need to get to this triple bottom right through here. These were lows from the month of June. They came between 1.0665 and 1.06703. In order for the buyers to feel more comfortable, they need to get back above that level and stay above that level. The price fell below that level on Monday's trade and hasn't been below that level since breaking. On the downside, in trading yesterday, the price moved below the low price from April. That was the low price for the year, but the break of that low price near the 1.0600 level could only get down to 1.0594. And trading here today, we tried again with a low price coming in this time at 1.05926 only, before rebounding back to the upside. And the CPI data sent the price a little bit more to the upside. So the buyers or the sellers had their shot at new 2024 lows. They missed, and the price has since rotated back to the upside. Again, we need to get above the 1.0665 to 7 level to still give the buyers a little bit more breathing room, a little bit more comfort. So be aware of those levels. Let's take a look at the dollar versus yen next. Again, I'm going to look at the 4-hour chart. And in price, in trading here today, before the data, the price moved up to test the top side of this trend line. Also, the top side of this swing area going back in time. Most recently, the high price right here was pretty much near the high price that we saw in trading here today. So traders are paying attention to that. It also was a low price going back to here, and this area was defined by just a number of different levels through here, and even going back further, which we don't see in this chart. So the inability to get above that level at 155.21 gave the sellers some room to push to the downside, and the CPI data has helped to push the price even lower. We're currently trading at 154.43 as we speak, which is back below the low of this swing area at 154.54. If the price can stay below that level and then move below the 153.88 level, remember that level was this high price right here, and then we return to that high price right here and here, and before breaking to the upside and trading last week. And trading this week, we tried to hold below that level, couldn't do it after finding support at 61.8% retracement and move back above that level. So 153.88, remember that level. That's going to be a key level on the downside, as is the 61.8% retracement, which again held support in trading yesterday before moving to the upside. Finally, the 100 bar moving average of the 4-hour chart is in place. So there's lots of stuff in between 152.86 and 153.88 on the downside. And once again, we just broke back below the 154.54 level, which is now going to be close resistance for the dollar versus yen. If the price can stay below that level, that's the best case scenario for sellers to take advantage of the inability to get above this trend line, get above the high of this swing area. So sellers are trying to make a play. We'll see if they can continue that play in trading here today. Finally, let's take a look at the sterling versus US dollar. We're seeing a little modest rebound to the top side after the CPI data. What we also saw in trading here today was the buyers against the 61.8% retracement at 1.2732. We did dip a few pips below that level, but could not sustain momentum in trading yesterday. Recall that the price fell below that level. It should have sent the pair lower toward this target area right through here, but couldn't do it. The market quickly rebounded, and we started to use that level as support, the 61.8% retracement level, that is. So if going forward, if the price can stay above that level in the short term, the buyers are in play. They have the, after this sharp move to the downside that we saw from end of last week to this week's low prices seen yesterday. On the top side, we have next resistance near the 128 level, so there is room to roam to the upside, followed by the 200-day moving average at 1.28181. Both of those levels need to be broken in order to give the buyers more confidence. If the price can't get back above the 200-day moving average, are they winning? They're not. The sellers still are winning. So there you have it, a look at three of the major currency pairs from a technical perspective. I hope they help you today in your trading and going forward. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.